Okay, here we are in exercise 18 13B. What this exercise does is it gives you some excerpts from the balance sheet and income statement of a company that uses percentage of completion method and asks you to infer something about the underlying primitive numbers that were used to construct these financial statement numbers. So, story is we've got a construction company in 2014, which is the current year. It began work on a construction contract, 5-year contract. The agreed upon construction contract price was $25 million. Again, we used percentage of completion. And at December 31st, 2014, the end of the first year of the job, we have these financial statement excerpts. We got balance sheet, accounts receivable, due from construction billings of $150,500. We got a balance in construction in progress of $650,000. From that, we subtract the balance in the contract billing account of $260,000 to come up with a net inventory amount of $390,000, cost of the contract in excess of billings. Over on the income statement, we recognized job revenues of some amount, construction cost of some amount, and the net of the revenues and the construction cost gave us a gross profit on the job that we recognized in 2014 of $130,000. The first thing we're asked to do is to determine how much cash we collected in 2014 on this contract. Well, that's real easy. The amount that is due us for billings that we sent out to our customers that they haven't yet paid us on is $150,500. The amount that we billed our customers for since the inception of the contract, billing since inception of contract, is the balance in this billings account. That's what that balance represents. So we've got $260,000. Now, what we want is that those are the total amount that we billed since the inception of the contract. The amount that we have yet to collect is given by the balance in the receivables of $150,500. So the amount of cash that we actually collected is the difference between the two. $109,500. We collected $109,500 worth of cash this year. Okay, the second part of the question asks us to calculate the estimated total profit to be earned on this contract. Estimated total profit on the contract. That's gross profit. Okay, so to do that, we need to go back up and take a look at this construction progress account. The balance of $650,000. That balance represents two things. It represents cumulative job cost incurred to date plus cumulative gross profit recognized on the income statement to date. That's what those two amounts added together represent the balance in the construction in progress account. At the same time, the balance in the construction in progress account also represents the total revenues earned to date on the contract. Okay, so it looks like for the period ended December 31st, 2014, the total revenues earned to date on the contract are $650,000. We can infer that by looking at the balance in construction in progress. We know that the profit earned to date on the job is $130,000. So if the total revenues earned to date on the job is $650,000 and the total profit earned to date on the job is $130,000, it must be the case that our gross profit rate on this job is 20%. For every dollar of sales revenue on the job, we anticipate earning 20 cents of profit. So again, that 0.20 is just 130 divided by 650. Okay, so if we take that gross profit rate of 20% and multiply that times the agreed upon contract price of 25 million, what we come up with is 5 million. And what that 5 million represents is the total estimated profit on that job. Total estimated profit on that job. So the answer to part B of the problem is $5 million.